Welcome to your week ahead preview. All eyes will be on inflation data next week as markets grapple with the potential for further interest rate hikes after a surprisingly resilient start to the year. The economic calendar is packed. The biggest potential market mover is Friday's U.S. jobs report at 13:30 Universal Time Coordinated. Expectations are for continued moderate job growth, but wage inflation will be key. A hotter-than-expected wage number could send shivers down spines, reinforcing the hawkish narrative and potentially driving the dollar higher. Before that, we get the Consumer Price Index on Tuesday at 13:30 Universal Time Coordinated. Again, this is all about inflation. The market is keenly watching for any signs that the recent disinflation trend is stalling. A surprise to the upside could trigger a significant risk-off move. We also have the second estimate of Q4 GDP on Thursday at 13:30 Universal Time Coordinated. While the initial reading was strong, revisions, particularly to the personal consumption component, will be closely scrutinized. Finally, keep an eye on Wednesday's release of PMI data across major economies. These leading indicators can provide clues about the health of the global economy. On the central bank front, we're in a bit of a quiet period, but don't get complacent. Several Fed speakers are slated to make appearances throughout the week. Their commentary will be dissected for any nuances on the Fed's thinking about the path forward for interest rates. Pay close attention to any discussion around the neutral rate of interest, as this is a key input into Fed policy. In Europe, the ECB remains committed to its fight against inflation. Any hints about a potential slowdown in the pace of rate hikes will be closely watched. In Asia, the Bank of Korea is expected to hold steady, but any signs of concern about the strength of the Korean won could trigger intervention. Finally, the BOJ continues to walk a tightrope, balancing the need to support the economy with rising inflationary pressures. Keep an eye on US dollar to Japanese yen, which is currently around 155. A move above that level could prompt a response from Japanese authorities. The earnings season continues next week, although it's winding down. Key reports to watch include Target on Wednesday and Costco on Thursday. These retailers will provide valuable insights into the health of the US consumer. The financial sector will also be in focus, with reports from several regional banks. With the recent volatility in interest rates, their results will be closely scrutinized. Also keep an eye on the tech sector. Any significant earnings surprises or outlook revisions from these companies could move the broader market. Geopolitically, trade tensions are back in the spotlight after Trump's announcement of increased global tariffs. This is creating a significant headwind for global trade and investment. The Supreme Court ruling against his earlier tariffs adds another layer of complexity. The market is still trying to assess the implications of these developments, and further volatility is likely. Beyond trade, keep an eye on ongoing conflicts and tensions around the globe. Any escalation could trigger a flight to safety and weigh on risk assets. Technically, the S&P 500 is trading around 6,910, near its recent highs. Key support lies around 6,800, while resistance is at 6,950. A break above that level could open the door to further gains. The Nasdaq is trading around 22,886. Key support is near 22,500, with resistance around 23,000. Watch megacap tech stocks like Nvidia, Apple, and Microsoft. Their performance will be crucial for the Nasdaq's direction. In Asia, the Kospi is showing strength, while the Nikkei has been underperforming. Watch 5,700 on the Kospi and 56,500 on the Nikkei. Gold is currently around $5,080, showing renewed strength as a safe haven asset. Watch for a break above $5,100, which could lead to further upside. Bitcoin is consolidating around $68,000. A break above $70,000 could reignite the rally, while a drop below $65,000 could signal further weakness. Finally, the DXY is hovering around 97.80. A sustained break above 98 could put pressure on risk assets, while a move below 97 could provide a tailwind. Other events to watch include the monthly options expiration on Friday, which could lead to increased volatility. Several companies are also scheduled to go public next week, including a few in the biotech and technology space. So, to recap the key takeaways for the week ahead, first, inflation data will be critical. The CPI and jobs report could significantly impact market sentiment. Second, monitor central bank commentary for any shifts in policy outlook. Third, keep a close eye on geopolitical risks, particularly trade tensions and conflicts. My positioning suggestion is to remain cautiously neutral. While the market has been strong, there are significant risks on the horizon. A hotter-than-expected inflation print or an escalation of geopolitical tensions could catch the market off guard and trigger a sharp correction. Don't chase rallies, and be prepared to take profits if necessary. Markets move fast. We break it down daily so you don't have to. Subscribe for your edge, delivered fresh every session.